Hello traders, Gary Wagner here. Approximately 12:45 in Honolulu, 6:45 in New York. It is Wednesday, 28th day of April, 2021, and this is the daily report for gold and silver. Considering that we traded it to a low of $1,762.80. The fact that we closed up only $3 is significant because it's $20 off of the low. Powell's press conference definitely propelled gold off of the lows into higher territory. We'll talk about that. We'll also discuss copper futures, the contract specifications, and things you need to know if you want to be part of the copper trade coming up. The show begins now. Although gold did not have a substantial rally today, closing up $2.80, currently fixed at $1,781.60. When we take a look at the lows, which are $61.80, roughly $20 from this price point, it did have a substantial move to the upside after trading to the intraday low of $61.80. Of course, we are long at $17.44. We have maintained our stop at $17.60 and escaped getting stopped out today by only $1.80. With the conclusion of this month's FOMC meeting today, as well as President Biden's address to Congress, the first time he's doing this as President of the United States later on today, we certainly saw an extended trading range in gold as it traded to a high of $1,782.70 and a low today of $1,761.60. The interesting thing on today's action, of course, is the low because it occurs exactly at the price point of the 21-day exponential moving average. That is this red line right here. You can see that the low matches up precisely. The other thing that is noteworthy is the fact that the body of the candle, meaning the relationship between the open and closing price, this green box here, maintained a price point well above 1772.60, which of course is the 23.6% Fibonacci retracement. As we have talked about on the last couple of shows, we're using a much shorter data set, which begins at the lows of June last year at 1675 up to the new record high at $2,088. While gold did not have a substantial rally, it did close higher on the day and well off of the intraday lows. It is trading in a manner that is consistent to what we had predicted in the way this most recent rally is unfolding. What we're speaking about is the fact that gold seems to have been trading, moving up substantially, which is then followed by a period of consolidation or sideways trading. We can see that that occurred at the end of last month, that first rally. That was followed at the beginning of this month by some sideways trading, and then another spurt that occurred 2 weeks ago on Thursday. This is the substantial $28 move, which took gold above some key moving averages. It's still below the 100-day, but it is now above the 21-day as well as the 50-day moving average drawn here in green. And this current price advance was also followed by sideways or narrow trading action in a defined trading range over the last, say, 7 to 10 trading days. Although we're currently trading above 1772.60, we do see real resistance continuing to hold at 1800, the key psychological number, as well as the 100-day moving average, currently fixed at $1,801.40. Traders, maintain your current long position from 1744. Maintain your current stop at $1,760. As you know, we did pull profits last week on our long futures and Forex position in silver. However, up until today, we maintained a long position in SLV. If you look at the low that came in today at 23.97, that is precisely where our stop was. We went long at 23.25. We went out at 23.97 for a profit of just under 75 cents per share. We will remain flat with no active trades currently in silver and focus on our long gold positions. As you know, we spoke about adding copper into the mix in terms of the metals that we actively follow and have trade recommendations on. Copper today once again had a gain. Today it was a much smaller gain, 0.21%. Up about 1 full cent at $4 and approximately 50 cents per pound. As we spoke about yesterday, I wanted to outline the contract specifications for trading copper futures, which we will overlay on the current screen. The first thing that you can see is I have put up what's called the futures board, and it lays out the contract months that copper is trading in terms of what these symbols represent. We're putting that up on the screen now, but this represents K as May, June, and July, and so forth. In terms of the requirements and contract specifications to trade copper futures, from brokerage firm to brokerage firm, they do adjust the margin requirements, in other words, how much you need to put down to trade a single contract of copper. However, the specifications are standardized to the following. The contract size for copper is 25,000 pounds. The symbol is typically HG for copper futures, followed by the month that is most active. In the case of eSignal, which is the platform we use and supplied by Interactive Data, the contract symbol followed by #F represents the most current contract on a continuous futures chart. Now, to what we're looking at in terms of price structure. We can see that copper has been in a dynamic move to the upside now for approximately 2 years, beginning back in March of last year when copper was trading at roughly $2 per pound. It has in essence doubled over that time period, and our current Elliott wave count is showing that we are in a fifth wave. We are looking at this as our first wave here. This moved from $2 to approximately $3. Our retracement is signaled by the conclusion of a second wave. You can see this long third wave that took copper up to roughly its current pricing at about $4.30 per pound. The decline and the conclusion of a fourth wave, we are currently in our fifth wave. In terms of where we could see copper prices going, we are merely 12 cents away from the all-time record high, with our Elliott wave projections looking to forecast copper going as high as $5.35 per pound. And traders, to put that in perspective, we have to go to a monthly chart to bring in enough data. As you can see, the highest monthly close on record is precisely where the top or current month has taken us, $4.49 per pound. The highest close on record, however, has been $4.65 per pound. That being said, a move in copper above $5 would not only be significant, but could offer us as traders a substantial profit opportunity. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.